Okay. So, hey guys, welcome back to our TradFi Bitcoin Club. Happy New Year. And yeah, today the topic will be dense. It will cause you to think, like, and it would be great if you interact and share your thoughts. What do you think? Why do you think? So yeah, this is going to be a great deep session. So yeah, I think you need to be like hyper focus on the session. So the author Alan Farrington starts from the thought of asking a question about what is money, and then he goes to ask like what is capital. And from here, when we come to know what is money and what is capital, then he talks about what is wealth. And wealth is basically, uh, I mean, it's a it's more things, new things, and cheaper things. So you save money to be wealthy, but money is not wealth. Money gives you the access to wealth. So this is was discussed in second point. Then he talks about stocks and flows. Stocks here doesn't mean the stock ticker or which we trade on in a broker or in the share market. Yeah, the stock here is, let's say you run a manufacturing company and you have stocks. For example, if you manufacture t-shirts, what is your stock? Your stock is cotton, right? So like this is being discussed here, stocks and flows. What is current what's happening in current fiat world with stocks and flows, and what will happen or what needs to be happened in Bitcoin world. Fourth point is the profit. Like, why are we concerned with profit, and is it, I mean, should we be concerned about profit, or the way we look at it currently is is through income statements of companies as a just like, here first comes revenue, then comes like operating cost, fixed cost, and then comes profit. So is this a right way to look at profits, or is this a wrong way? So we'll discuss it in the session. And last is Bitcoin's killer app. And like, then in the fifth point he talks about how Bitcoin is the capital, and because Bitcoin is good capital, how it solves the problem of uh, of the products which are being built. uh, is someone's unmute? Please mute yourself, guys. uh, I can see Srushti 28. Can you please mute yourself? Yeah, thanks. So now going to the axiom of capital. So now the first question comes: Bitcoin has spurred a renaissance of thought on the question of what is money. Bitcoin is often linked to the Austrian school of economics without much thought as to why, but pondering this question allows for the most thoughtful justification. Money is an emergent order, and understanding its operation depends on appreciating irreducible uncertainty, subjective value, and methodological individualism, often described as logical treatment of subject fundamentally resistant to scientific analysis. The emergence of Bitcoin and its acceptance in the market has many Austrians rightly cackling at a real world proof of efficacy of the school. On which note, Mises Monumental, The Theory of Money and Credit, is essential reading of any for any Bitcoiner. So If you are a Bitcoiner, I think you should go through this theory of money and credit. I am going through it. I am like I am reading some parts which I like. Some of you might know. I have submitted recently Bitcoin backed credit research paper to the University of Wyoming. So I was going through credit from 2 to 3 books. This was one of the book. I think you should read this. Then comes Origin of Money. Here they also mentioned Menger's Origin of Money might be the single best prose answer to the preceding question. More a Bitcoiner himself than an Austrian, or at the very least a polymath, Nick Szabo. Writing is essential reading not only for Bitcoiners but for anybody struggling to understand what on earth is going on in the world. Contemporary Austrian economist Rahim Tagizadan has indeed credited Szabo's thesis in shelling out as a novel to the school. That said, we don't think Axiom as a money business, and nor does anybody else for that matter. We operate in capital markets, and I have personally found impossible in the past few months to set up a capital markets business without thinking about the nature of capital. The reader will not be surprised in the least to learn, I believe, there is an intimate connection to money, and hence that capital on Bitcoin standard is likely to be every bit as different as money and possibly more so. Now, till here, what he is trying to define or what he is trying to tell us is like to understand money, go through these books, and like you will get an understanding of what probably is a money. In traditional sense, we define money as the most liquid capital, but here in Austrian economics, you will find some more definitions of money. Now, here he has also said this: the perfectly liquid capital is money which is perfectly homogeneous. Money bears no uncertainty because it is the standard of value against uncertain endeavors are to be measured. So, these are some things which he tries to uh, tell us that go through these books and have a grasp about what is money, what is credit. Then comes Joseph Schumpeters. I am sorry for like the pronunciation of what is the name. Joseph critique of the nonsense of equilibrium as leaving no space for entrepreneurship is as much about capital as anything else. Without entrepreneurs, there is little to distinguish productive capital from mere assets, animate matter rich with potential, from mere inanimate stuff. One of the many lessons Israel Kirchner's analysis of the conceptual links between competition and entrepreneurship is to force the realization that capital is both heterogeneous and unavoidably the product of human creativity. This heterogeneity is arguably the soundest conceptual grounding or the best formulated axiom of non-circular definition of liquidity. So here, what this Israel Kerner's analysis is, now if you know what is capital, generally we think capital as, I mean, from a business background, and to you, capital might mean how much money do you have in the bank, and that is your capital. You have might saw or listen to some podcasts where the people talk about, yeah, it's a very capital incentive like intensive business. So one of the capital intensive business in traditional world is energy business. It's highly capital intensive. But capital is not only money, not only money in your bank, but also capital is basically your assets, your productive assets is also your capital, which he calls it as heterogeneous capital, because every asset is different. Like for example, you have a manufacturing plant and you have machines to produce t-shirts from cotton. So that is also, like, in current sense, that is called as productive asset, but it is also kind of a capital, which is what is Israel kernel analysis says. Um, Coming to the next part, the perfectly liquid capital is money. This is what I was talking about, which is perfectly homogeneous. Money bears no uncertainty because it is the standard of value against which uncertain endeavors are to be measured. The role of entrepreneur, the role of entrepreneur is to embrace uncertainty by accumulating capital, putting it to heterogeneous use in the creative and competitive pursuit of the satisfaction of the value of others. So far, so simple and so seemingly axiomatic. But if you are reading this, you are most likely interested in Bitcoin. And if you have been kind enough to invest in Axiom Venture Fund 1, then you most certainly believe that we are still early. And so I put it to the reader that this, or perhaps the consequences of this, is not at all widely understood. So, because the kind of capital which we have right now is fiat and not, uh, I mean, I'm talking from the world lens, because through in the world, most of the wealth is concentrated in fiat capital, or fiat uh, or TradFi system, just to be broad enough. Uh, because the money itself loses value, it incentivizes consumerism or hyper consumerism. What does that mean is, like, you want to buy a thing right now instead of waiting, or instead of saving for that thing and then buying. For example, you might, like, I am 23 and I have some friends who bought like an iPhone on EMI. One way was they could have saved for an iPhone and then they could have bought it. But now we are in a world where access to loan is, like, very easy, and that's why we see uh, we buy, like, consumer electronics or every other thing which we need on EMIs. I was listening to a podcast today of Saurabh Mukherjee. So, who is Saurabh Mukherjee? He is one of the, like, investors in the TradFi space. Uh, what he was, like, addressing a problem which is happening in Indian economy, especially in the Indian middle class. So a general trend around the world is, let's say, if a middle class person takes a loan, then there's a high probability that that loan would be a home loan. But because of this consumerism and hyper consumerism and depleting fiat, the loan which Indian middle class has, or the percentage of loan which Indian middle class has, is more consumer loans and not home loan. And this is scary because home, on a longer time frame, appreciates and not depreciate. But currently, if you see Indian middle class, like, a good percentage of their earnings goes to EMIs to, like, fulfill these consumer loans or personal loans. So this is not a very good sign for an economy. There are plenty of definitions of capital out there, but my favorite definition is not at all technical and is not from an Austrian. It is that Hernando de Soto. It is not even a definition per se, but more of an image. This is exactly why I like it. In the dismissal science, rhetorical flourish is hard to come by, especially while remaining somewhat accurate and without spiraling into status agitprop. In his fantasy, in this, in his fantastic mystery of capital, De Soto calls economic potential energy. Think of it as a spring, a coiled spring which has been pressed. So if you release that, the spring will again come back to its original position with releasing kinetic energy. So, or there's a water in a dam which is at a height. So if you release that water, then the potential energy will be converting into kinetic energy. So when this guy De Soto talks about economic potential energy, he just thinks about capital as this economic potential energy. So basically, a capital is economic potential energy which will help you to do things and to produce more things, cheaper things, and newer things. Coming to back to reading, that work has been done, but the fruits of that work have not been realized, and that they can be realized with intention with human action. It is within our power, not as Homo economici, but as individual thinking humans, to tap this reserve of potential energy based on what we value. It is not the preserve of omniscient, omnipotent capital, Tsar who allocates all capital from a palace in the sky, nor is Hayek obsoleted by advances in artificial intelligence to excite exactly some such fashionable statist agitprop. It is entrepreneur that is the motor of the world. She thinks as an individual, she acts in the moment, and she allocates at the margin. Steve Jobs, an entrepreneur, if ever there was once, famously said, I think one of the things that really separates us from the high primates is that we are tool builders. I read a study that measured efficiency of locomotion for various species on the planet. The condor used the least energy to move a kilometer, and humans came in with rather unimpressive showing, about a third of the way down the list. It was not too proud a showing for the crown of creation, so that didn't look so good. But then somebody at Scientific American had the insight to test the efficiency of locomotion for a man on a bicycle. And a man on a bicycle, a human on a bicycle, blew the condor away, completely off the charts. And that's what computer is. To me, what a computer is to me is it's the most remarkable tool that we have ever come up with, and its equivalent of bicycle for our minds. So Steve Jobs here talks about the potential energy or the capital which we store. An entrepreneur creates or he thinks, Steve Jobs thinks capital as a tool, and from some less we put in, we gather in some capital. uh, from some capital I mean monetary capital, like funding, and we also put in some of our human capital, and then we come up with to do the same work. For compare it with, initially you were walking, and if you walk a kilometer you expend much more energy, but if you sit on a bicycle and then cover a kilometer, then like you spend much lesser energy. So this is what he is trying to say. And then he comes to computer. He compares computer to bicycle, just bicycle for our minds. So it, let's say you are running, like you are doing a math problem, but now you have an AI who can do this. And if you like, if you by self without using a computer try to solve a math problem, it will take you like a lot of time to do that problem. But if you take help from computer, you can do it in minutes or maybe seconds. So this is what Steve Jobs tries to say, that uh, this thing I like this definition, like more things, cheaper things, and newer things. So the main goal of an entrepreneur is to like have some capital, put in your human capital, and then the capital which you put in the start as a monetary capital, let's say Bitcoin. Let's say with Bitcoin you also put in your work, like put in your energy to create something new, and from that you are able to make more things. You are able to make it cheaper beyond what it like, let's say it costs you one Bitcoin right now, so like to do something, some X work. But or let's say you, again going back to the manufacturing example, you have a machine which generates or which is capable of producing 100 t-shirts an hour. But let's say you like deploy one Bitcoin in R&D. When I say one Bitcoin, I talk it from a point of view of monetary capital. And you employ some scientists or some engineers to make the machine much more efficient, to take productivity of that machine 10%, 20% higher. So the machine which was generating 100 t-shirts an hour now is capable to generate 120 t-shirts in an hour. So that fits into this definition of capital. Coming back to the reading, this is usually understood as commentary on technology, but I think it is more about capital, a less romantic framing perhaps than economic potential energy. Capital is tools. Jobs' point is just how potent software is a form of capital. But ultimately, all capital magnifies the desirability of the output, some exertion of time and energy. A bicycle is one example, a computer is another. Just a minute. Just let me finish this paragraph and I will let you. At the risk of mixing metaphors, capital is bicycle of labor, of time, of effort, and of is someone unmute? Uh, okay. Where I was. Yeah. At the risk of mixing metaphors, capital is the bicycle of labor, time, of effort, and the grind to produce value by hand. Capital is tools. Coming to my favorite thing, more things, cheaper things, and newer things. Yeah, now if you want to ask something, go ahead. I think somebody wanted to.
Actually, just I wanted to ask, where is this article we can get and we can again read it?
I think we have shared the link in the, or I will share the link in our channel, TradFi and Bitcoin.
Or in the message if you can share it here only.
Yeah, yeah.
Yeah. Thanks.
Any questions? No? Okay. Coming to the favorite part here, more things, cheaper things, and newer things. What does money have to do with all of this? The non answer is to say that money is the most liquid form of capital, but that is to subscribe to a circular explanation. If by liquid we simply mean the time and difficulty required to transform something into money, then money can be transformed into money in zero time and zero difficulty. Hence, it must, but capital arguably is real wealth is illiquid, but capital arguably is real wealth is illiquid, and the liquidity of money is useful first and foremost because it makes it far easier and more efficient to allocate capital than otherwise. Now, here, when he says about uh, what is our goal in the first para, he talks about like putting in money, then converting into more money, and again putting in money, and then again converting into transforming into money in zero time and zero difficulty. Is this the goal, or converting money into capital is the goal? Here, I would like to bring in some examples of what's happening right now in space. What are, and this is why one more trend which I can see, and this is why one more trend which I can see right now. Most of right now, most of the returns right now are being made in private equity and not in public equity. From like again going to the examples which are given here, because private equity, to the people who are not aware about private equity, what is private equity? Private equity is basically these startups and VCs and all. So because they have lesser regulations, lesser filings to do, this makes them, or this helps them to think in the long term. And for example, a startup is there and it needs to burn money for, let's say, 4 to 5 years to generate something valuable, which could essentially be generating more things, newer things, and cheaper things, or any of these. And because of this, the trend is, at least in the US, I was listening to a podcast yesterday where this guy talks about the pension funds in the US. They have like a good amount of percentage in private equity and private credit, and lesser percentage in public equities and bonds. So why is this happening? Because the real returns are made in these asset classes rather than public markets. So this is a trend which I noticed personally, and I think of it as, would OpenAI, or could OpenAI have built what they have built being public, or because they were private they were able to like raise funds, burn, and be top notch and build that product? I'm not talking about their valuation, like don't hold me like I'm saying if these AI companies are at a good value. I literally don't mean that. I think they are much more overvalued. But what I want to say is that what if OpenAI was a public company? I don't think they could have built um, this chat GPT uh, as a better product if they were public, as compared to right now, they are still private entity. They are still private. They have not gone IPO. All of the startups like Zomato, Swiggy, or these recently coming up startups, for the most period of time, they were private. And the investors who made most amount of money are the people who invested in the early phase, like InfoEdge. InfoEdge is one of the known investors in these early tech companies who were the beneficiaries of the internet boom which happened after 2016 after Geo. So because they were private, I think they were able to build a business model, at least a business model. I'm not talking about is it sustainable or how will they do in the future. I mean, there are some startups who are still burning and not able to generate profits. But uh, because they were private, they were like, they didn't have this quarter on quarter pressure to report positive earnings and to report growth. They have built a product which public companies find it difficult to build. So that's the point where which Alan Farrington is trying to explain here. The point of investing money is not to transform that money into more money and then again transform that money into more money. The point is to transform money into capital, and that capital then makes new things, cheaper things, and uh, what do we say, more things. So it was a brief discussion here about how should we see in the later part of this. He explains about Bitcoin's killer app, where he talks about how Lightning Network, how Nostr, and how Bitcoin mining, like, is a good way to for what do I mean here is uh, because mining is highly competitive. If your to mine is like in five, mining business is kind of like runnable business, and if it's not, then mining is not profitable for you. And because of this, miners look at stranded energies. So Bitcoin miners have explored the energies which no one had explored in the past. For example, flare gas. The flare gas energy was continuously running. It was the gas was just being burnt, yielding literally nothing. And then comes Bitcoin. Then comes Bitcoin mining, and mining have figured out this cheaper source of energy or newer source of energy which was being wasted, and they are using it uh, for a rational cause here. Then he talks about lightning, and we'll come to that part, but this is what he tries to explain here. um, I didn't tell you about what are the ways to make uh, this point here, uh, when he talks about transforming money into directly more money, and then again transforming more money into again more money with zero time and zero difficulty. So there are some companies who do fiat games, like they raise capital. For example, they raise debt and then they buy back their own stock. What's happening in a case, they are like, if you are an outsider, you can see that they are raising capital via debt, and on the other hand, they are buying back their own stock. What does that mean? If you are buying your own stock, you are paying, like, you are returning that capital. So essentially, this is a way to make or to transform money into more money, and again repeating the cycle. So this is not usually that should be done. The thing that should be done is, let's say you are a technology company, invest into data centers, invest into like human capital, invest into top notch engineers, and build some products. But what's happening? On one hand, they are raising capital at costs of 6%, 5%, and their own stock, which is artificially pushing their stock value. These are the ways, these are some of the ways which I can think of, where they are making or they are transforming money into more money for their shareholders. But this is not the end game. The end game is to create and cheaper things. Because of this fiat games, what is happening? Money is becoming like abundant in the abundantly, or money supply is increasing with governments, and money's value is getting lost over time. But how will you do things if money is not losing value, if money is like being there where it is there? In case of bitcoin, one bitcoin will always remain one bitcoin. So and the things or the products which we have right now will go down in value. So instead of playing these games, what you will do, you will, whatever potential energy or whatever potential stack you have stacked with bitcoin, you will deploy that. Why it's not happening today? Because bitcoin's return is much higher than what you like while deploying bitcoin. But over time, when bitcoin settles around S&P 500, like CAGR, I'm sure there will be businesses which will figure out, like, yeah, we can deploy bitcoin as capital, we can put in our human capital, and we can make products which will generate some new thing, or which will generate more things, or which will make some things cheaper, and we can do it. So uh, the the nearest example is basically miners, lightning network, and Nostr. So right now Nostr is an open source thing, but we have built a thing, many such new things which will generate revenue in future. We don't know about how are we going to generate, but we have like made a base layer where we are building a social media, or we are building some new things on top of Nostr. Okay, so coming back to the readings, I think I was here. Money does none of this. Money is not wealth. Money is a claim on wealth. Money is liquid. I think it was over. Coming to next para. Money is neither sufficient nor necessary for wealth, but capital arguably is. Real wealth is illiquid, and the liquidity of money is useful first and foremost because it makes it far easier and more efficient to allocate capital than otherwise. Another way of thinking about all this is that money is time. More specifically, money is time now. But capital is something different. Capital is cumulative product of having decided not to consume today, but to make more, cheaper and newer the future ability to consume. So understand it like this. The reason why you are saving Bitcoin today is because in the future when you are not able to work, you are you will be able to consume more or like live much better life. That's the reason why when you are earning, you are saving bitcoin and have to eat food, you have to drink water, you have to like learn new things, you have to educate yourself, you have to upskill yourself. So these things are necessary. I'm not saying that you don't do these things and just uh, like buy Bitcoin and sit on it. Absolutely not. But what is happening currently is you are taking value from your own future. And how are you doing it? You are doing it by taking loans and taking loans for consumer products. He can buy it, but yeah, it's not necessary. So what Bitcoin helps us here is make us rational, make us take a rational decision, because this is personally happening to me. Whenever I think that should I buy this or should I don't should I not buy this, or should I push it forward into the future, the most probable answer for me right now is to push my thought to buy it right now, unless and until it's necessary for me to live, like food. I need food to be alive. So, to do our best to minimize the economics jargon, once again, we might simply ask, what are you going to do with your time? Are you going to create or consume? And how to do the characteristics of money as the saleable representation of that time influence your decision. I sincerely believe that this is the killer app for Bitcoin pricing capital. So Bitcoin helps us price capital. If there were ever a time to say that Bitcoin fixes this, here it is. So it's 8:54 right now. I think I should stop here and open the floor for chat. Jatin, you can stop recording. And we'll continue the next part, like other half in the next session.
Digant, if you were to summarize this, like this article, according to you, like how does the author is?
Yeah. So when he talks about money, he says that, money is just a thing which we need. Like he talks about potential energy. So money is just a potential energy which we are saving right now. And when he talks about capital, there are two ways where he gives some different kinds of definitions. So he talks capital as a tool here. So capital is a tool, but capital is also like this potential energy which we have saved, which we have like saved um, throughout our life. So uh, when he talks like in the examples which we wrote in the article, he talks about bicycle. So in his definition, bicycle is also capital, and your potential energy is also capital. Money is just a thing which helps you